Hey traders, long weekend, so holiday weekend. So there was no get together meeting this morning, but I did collect all the requests as far as charts, and I'm going to run through them right now. And this is going to be the list that's going to come with them. So we have about 150, 146, and comments in here. If I didn't put comments in this column right there, I probably made sure that there were some indications on the chart itself. On the right hand side here, there are some things that stuck out as tradable. CPS is credit put spread. Flag is just for me, a note for me to put a flag next to it. Debit call spread is another bullish trade setup potential. So these are notes for me to pay attention to these during the week to see if there is an opportunity or not. I will put a link to this in the email and in the video description as well, if I don't forget. All right, so let's hop to it. So Apple, this is a 2-hour chart. Therefore, it tells us there is support, but it's very delicate, and if you lose it, you're going to come down to the low 60s, 162, 160. If I remember correctly, that was an area of interest from the open interest as far as options are concerned. So if the markets hiccup Monday, Tuesday, it falls down there, I may be enticed to do a credit put spread. Meanwhile, somebody asked for an iron condor, Judy, last week, and this was the one that's working right now. So this was a viable iron condor from last week into this week. It looks like it should survive, so it remains to be seen. So this is crypto, I believe. Okay, so this is not the actual chart, because the actual chart would be AAVE It looks the same. There's support below, there's resistance above. So above 180 catches a bid. It has support below. Now here's the caveat. I think Bitcoin is the one that drives everything as far as crypto, and Bitcoin's still not out of the woods, and I still think we lose support in Bitcoin and go much lower. In case we don't, I'm already long as described months and months ago in crypto. I have longs in SOL. I bought them at 78. Now the highs were 140 something. CRO and Ethereum, you can just use Bitcoin. This one will move with them, I think. Airbnb, I still like it from the standpoint of it is tradable via an iron condor. These were the setups I've shared before. They're still working. I will try to set them up again if there's no earnings. If there are earnings, I avoid it. So like I wouldn't want to do anything past May 12th. So I think May 6th will be the latest trade I would set up for that. As a stock itself, if you take out 180, I guess I should have done that. If you take out 180, maybe it is there, but on a lower time frame. Let me see here, 4 hours. Yeah, it is. This one. This is viable trade setup. It is visibility there. It wasn't showing up on the daily chart. There it is. Above here, it catches a bid, but it's not likely these days. It's got resistance and it has support. So if it falls into support, I would do a credit put spread. If it goes into resistance, I would book my profits just in case it fades. Adobe, I would like to be long this stock based on this chart if the markets hold up. I still think that scenario is playing out. The swing off of this bottom, it has a potential of being at 520. So I would like to be, see, I marked it for myself, credit put spread, leave room for error, debit call spread to capture the swing up. The combination of both would be good. Affirm, similar scenario, similar comments. So is this finally the base that's going to snap them out of this descending hideous pattern? Let's see. If they hold like 33ish, I think they have a chance of finally snapping out. The big one would be taking this out. But step one, establish a base already. Stop falling right back down and making lower lows. AMAT, I thought they would stabilize, but they didn't. So pretty dangerous knife to catch right here. Be careful for the near term. You're in the breakdown. There is support below. So the closer it comes to 108, the more braver I get catching the falling knife. If you want to get long now for an opportunity to have an upside reaction to the earnings, just be careful. I mean, this did not play out. I thought it would. it's falling into, I mean, it has support into 112, but what if it doesn't hold? I also want to raise the alarm early about everything from AMD. You'll see in a minute. Everything that is, actually everything, period. All the semis are in danger because of what I see in AMD. And if all the semis are in danger, then the Nasdaq was going to be heavy, just because of what may happen bad in the semis. SMH, XLK, AMD, Nvidia, Micron, this one, everything. So AMC, I still say it goes to single digits if still above 20, below 21. They briefly spiked above it, I think, in sympathy to GME. This one has the management needs to reinvent itself. They're at a disadvantage with their business process, so they're in danger of triggering single digits. I wouldn't short it because it's going to single digits. I'm just saying don't chase it based on rallies unless you're actually trading the price action and not the fundamentals. The fundamentals are garbage. It's bleeding. It's dying. If it cannot borrow money, I think it goes out of business in 6 months. So before I say that, yep, it's burning cash from its operation to 600 million a year, and so it continually needs to borrow. It's losing on the P&L as well, and revenues are still half of what they were before pandemic, and that was already a detriment from prior days. So pretty dangerous company to bet on fundamentally, but hey, this your money, not mine. Okay, so AMD, the reason I'm afraid for AMD is because they triggered a loss that is massive. Look at the size of this Head and Shoulders. I don't think you realize how bad that is. Okay, so on paper, if you lose this line, that is the downside target, so below 60. So let's not go there because it has a ton of support in between, but it's in the bears are in control, and pops into 100 now will be attempted to be sold. So the bulls need to hop back above 100, preferably above 104. Otherwise, they're going to sell the rallies and they're going to be stuck in this descending channel, which will affect everything else. Like AMD is not going to do this alone. If it's doing this, then the whole market's in trouble, especially other semiconductor companies. Amazon, I don't remember, so let's put back the drawings. Okay, so it has support below, and if it loses that support, it accelerates lower. So if I were to want to get long Amazon, I would do a credit put spread, bull put spread. Why? Because it leaves room for error, and it's not surgical. And if it falls into 2840, I would attempt to catch a falling knife. So what happened is it's priced out this. It hit our target, and now it's rising back up. So it's important to hold this low. Otherwise, it's going to come back down to here. So credit put spread works. Iron Condor works. ANET, careful. It may have lost something that triggered. So 120 is doable, and it has resistance above. Not an obvious entry point, I bet you. Yeah, no. It's going into prior fails with strength. So short term, this is a weekly chart. Short term, you can't short it. It's just how late are you? So the breakout was here. Target of that is somewhere around here. Going into failures from 2018. Wait till as a trade, if they take these out, chase it to 76. So if you're long, you can stay long. But if you're trying to get long, know that it's a trading opportunity. So on a weekly basis, so if they do this and then they fail and then somehow they drop, then you can chase it to high heaven. I'll show you what it means. I ran out of space. So let's say they hit that and they fade. Don't short it because they may be reloading long. Because look, that would be a gigantic weekly inverse Head and Shoulders with much more upside than this one. I stopped here just for giggles. Apps, let's go to 120. Okay, so it has a chance at stabilization. It has support below. It just needs the market to cooperate. Somewhere here, there lies a buyer that could bring it back up to 46. Now, if they take out 48, maybe we can talk about higher levels. I don't know what this is. Okay, this is not an obvious entry point. Be careful with these micro caps. Prior fail was at 8.2. I would not chase it into that number. AXP, there's no reason to engage any which way or another. I mean, you could do an iron condor, but if I remember correctly, it doesn't have enough premium to do so. So like here I said stop out. There's no such obvious entry point. I guess I can move it to here. Support zone down here clearly. So if it comes down to here, I would be tempted to do a credit put spread. So I'll put myself here. Credit put spread. See how fast I type? I found a new program that I can reassign my entire keyboard. So I spent a couple of hours. It's a beautiful thing. Okay, BA. There's no obvious moves. Does it have earnings soon enough? So hey, whatever I say, take it with a grain of salt. Its clients, the airlines, are not doing well. So by definition, it shouldn't do well either. So I would be careful around earnings. The message from management could be conservative, and I don't know what people are expecting. So this is support. Clearly it has worked, but now I need to reword it to say danger. So maybe down here I would re-engage long, but not up here. Not into earnings. Into earnings, I'm hesitant to do anything. It has a range. If it wasn't for the earnings, I would do an iron condor, but the earnings are pretty close, so I'm not sure I can squeeze another one in. Alibaba, the same story. It has the potential to go to $250. Yes. So am I going to go all in? Hell no. Why? Because it has a chance to go to $70. Why? Because I don't know what the hell's going on in China. On its own, it's a fantastic company. Technically, it should have found footing. Every time it does, it fades right back down. I told you I was expecting a rally. The rally came, and when it was 100% and people started getting long, what are you thinking? So I can't do it. I could sell a put spread. I could sell puts to own shares if I'm that guy. Somewhere here lies a dip that you can buy, target of which is 110. This is a potential target. Okay, but you have to stabilize. So credit put spread, debit call spread, I guess I can look at it. Okay, let's put a note. Credit put spread, debit call spread. Add note. All right, Baba. No way. They have earnings. Technically, this was a trigger for much lower prices. So don't be surprised to see it lower. It all depends what management says. It has a hard bounce at 36, 37. So, but it also has a giant head and shoulders triggering. Now they can still save it by popping up to 40. They can still bounce off of 37. But I would rather wait for the earnings to come out and then trade it with some more information. The Fed is taking away the tailwind that banks had. However, I did some research. I shared a video, I believe, but the idea is that raising rates this time is not going to hurt banks because of the way the yield curve is. When you heard the yield curve is inverted, it doesn't mean like the olden days. The 3 months to 5 years, that's the yield curve that's important, and it's widening. And that should translate into more money for the banks, because the typical yield curve that CNBC covers is bullcrap. It doesn't mean anything to banks because they compare the 2-year, which the banks don't borrow at, and the 10-year, which is not the average borrowing time frame for consumers and businesses. So the 3 months is closer to what the bank borrowing rate than the 2-year that CNBC uses. So you compare the 3 months yield versus the 5-year yield, which is closer to the 6.5 average borrowing rate time frame. So that yield curve is expanding, which should mean more money for the banks, but they're losing a whole bunch of good stuff too. So I think the banks are meh at best. BK, not an obvious entry point. That's all I got to do for this one. Baker Hughes, great opportunity as far as whoever was long, but now you have resistance here, support there, ping pong in the middle. BMY, same deal. It's not an obvious entry point. If you're asking me to short it, I'd say you can short it, you can try. But if you're asking me because you want to buy it for the long term, I say you and I don't trade the same way. This could be a multi-year breakout. So for a trade, it is doable. It could get to 90, 92, 96. I'm not sure. But I wouldn't invest in it up here. So be careful with that. Okay, BMY, good company, nothing against it. I don't know what this is. Going into here is resistance. If you take that out, it triggers something, but it looks like more of a trade than an investment. Yeah, this weekly chart shows how much resistance there is going to be up here. So know where you're at. 55, okay, 58 and higher, it starts getting to be pretty congested on a weekly basis. Weekly. Citigroup, same comments about Bank of America, except this guy already reported. If you remember, before the report came out, I was optimistic Citigroup. So I may issue that. Actually, I'm going to flag it. I don't mind a trade on Citigroup to swing it back to 58. So credit put spread somewhere down here, debit call spread somewhere up there, or even calls or shares for a trade. I'm not sure I like the fundamentals. It's a bank. I mean, it's not a problem. But as a trade, it could swing back up to here. So somewhere here there was a buy the dip zone to get to here, the eventual target. Now you take this out. This could be a breakout, another leg. So leg one will get you there and another leg higher. So the way it would develop, something like this. All right. So let's go there and put that in there. Better chart than this one. There, changes on the fly. Okay, Cardinal Health, definitely not an obvious entry point. Vulnerable for dips. You can't short it based on that, but look at where it's at. Anyway, it's not an obvious entry point. That's the easiest statement. Caterpillar, also not an obvious entry point. Also counterintuitive. What the hell? I thought the world was going to be shrinking because central banks are going to crimp expansion. So who's buying the cats? Farmers? Because we need more food? Maybe. Not sure. So be careful and don't short it. Above here, it goes to there. If you want to short it, limit your risk. CCL. Okay, stuck in the middle of a tight range. It has sellers above and buyers below. Not much to do right here. Credit put spread if there's no earnings coming soon. So how come they show us the earnings here? It looks like the earnings are nowhere there in the future. When was that? March. So June. Yeah, tradable with an iron condor if you want. Pretty active bunch though. Maybe a credit put spread, maybe. Notes to myself. CCL, clear channel. Not sure why I want to mess with it. It has support, it has resistance. Not my style of stock, but there you go. You have a very well defined range. Manage your risk accordingly. Chewy, I still like the business long term. I still like a credit put spread. I still like a debit call spread eventually. They still haven't manifested that. So maybe down this time, I'll move it down to here. Maybe this time it's different. All I know is it has support. If the markets are higher in the future, this one should be higher in the future. The P&L is fantastic. There's no need to distrust this P&L. It's not spending a lot. So in fact, I think it's $210 million in positive cash flow from their operations. So theoretically speaking, they don't need to borrow to exist. Only 2 times sales. If I get assigned these shares, I stay with them. If I have a credit put spread and it gets under fire and I get assigned shares, I would sell my protection puts and hold the shares. CLF, not an obvious entry point. You do have support, but you need to hold it. You do have a lot of resistance, and I think it's going to take a lot to poke through it. So manage your. I put this note, should be here in April, and it's dripping towards it, like descending trend. So you have to monitor that. I wonder if there's going to be another spike of sorts. So here, monitor the behavior. I'm not trying to say this is a top, this is a bottom. They're selling rallies. Is it? So that's 2 of them potentially. So monitor that. Clover, long term, I would hold it as a stock. It's only $3. I wouldn't bother with calls. Short term, it has a rally to 3.4. It did deliver one from before. I think this one right there, I said 3.6. It did deliver 3.9. I think it can repeat. Now the caveat is if you lose this support, you're coming down to 2.9. I would get long again, long. And this is a trading stock that could be an investment for the long term. It's cheap enough to buy the stock as opposed to mess around with the calls. No clues on CMCSA, stuck in the middle of the range, and I don't know what would make it get out of either. And you have a cloud of resistance above and a cloud of support below. Not a cloud below, but anyway, you know what I mean. So like, there are no clues. Coin, I caution coin with the same caution with Bitcoin. So on its own, I do like the company. It's growing fast. Its P&L is growing superbly well. It's very profitable already. Net income of $3 billion. How is that possible? They did buy a company, so that could be muddling things. The overview, they're definitely not bleeding. Look at the cash what? How is that possible? 10 billion in operating? Yeah, if I get assigned this stock from selling puts, I would hold it forever, because for some reason it trades with Bitcoin. If Bitcoin falls, it falls. The logic, unless they actually hold Bitcoin products or coins, it doesn't make sense, because more people are going to be trading coins. But anyway, there it is. So this is a real threat, especially if Bitcoin does what I think it's going to do, which is fall to 33,000 again and lose it and go to 28 and then 21. So it may fall. I will, I'm just going to put an alert here regardless. Just get long, question mark. I want to see where the support lies. On its own, I think it gets back to 170, 180 on its own. I'm going to do this. Potential, but big threat from Bitcoin debacles. Okay, let's go and update it. Coin. All right. Cost, not an obvious entry point. It may be drawing a head and shoulders that brings it down to here. I would get long here if I wanted to. It's a great company. It's just not a tradable spot. Coupa is a tradable spot, which is pretty weird. This was an incredible opportunity to buy the dip. I personally missed it, I think, but I spoke to some people about it, and look at how orderly now they are. So this is like the floor they needed. So now this should be support 98. And if you lose 98, you're going to lose a little bit more. But it is a bankable support, I think. So I'm going to put it. Whoops. I'm going to put it there, as in careful. This might get you down there, but it is a look. I'm going to raise it. Buyable dip. Conversely, there is a chaseable top right here. So you break out of this one, you might have a mini breakout there. So credit put spread work, debit call spread may work, both should work. It depends on the time frame. Make sure to avoid earnings. CRM, I want to be long to capture that yellow thing. Credit put spread is the way I would do it. I think we have time before the next earnings. It does have support, and it does have support below that. It's a long-term investment. So this is a swing trade, short-term swing trade opportunity that could translate into a long-term investment, because the company's fantastic, and Wall Street is hating on it. Technically, it is at a disadvantage. So I would be catching a falling knife. Therefore, I shouldn't go all in. Crocs stuck in the middle of the range. I wouldn't want to do anything with it right now. You have a lot of resistance here. You have a lot of support here. If anything, I would catch falling knife if it falls below 71. Otherwise, chase above 75.5 if you want to trade that opportunity there. CrowdStrike did exactly what we thought it was going to do, and the target, the easy work has been done. And up here, I would wait for a dip to get long. I mean, this was a perfect trade. It could rally higher, but not easy. Starting here, I don't know what this is. I wouldn't touch it. For me, as an investment, as a trade, clearly the bulls are winners. They have more room, but make sure you're nimble, get in and out based on these shorter term levels. DAL, weird I don't trust airlines. They absolutely have horrific businesses and terrible management decisions, or at least environment. Maybe the management's not so bad. Maybe the way they do business is bad. So if they take out, for whatever reason, 45.5, I mean, I would be shocked, but it's definitely a big opportunity up. Going into that, I would avoid the longs. It's a resistance zone. I would buy dips. DR Horton, I would avoid all real estate, especially home builders. It does not make sense. And besides, they are selling rips. Look, every rally sold. Rally sold, rally sold, 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 sold. Nope, don't want it. Why? Materials have never been more expensive. They're canceling projects left and right. Not for me. Definitely not for me. Okay, so I'm gonna stop here and do another video starting Disney on out.